Very good morning, good afternoon. Welcome to the daily live session with myself, Giles Cochrane. Good morning, TM. Good to see you. Elias. Morning, Ollie. Morning, Mark. Ruby. Smith. So good to see you, Diego. Welcome, welcome. Okay, folks, let's get stuck into the session. Um, we're we remain in this very sharp, volatile period. Okay, so I just want to summarize because I think it's the best thing to do at the moment. When you have markets like this, you get these kind of pockets of activity that you need to be on top of. And the activity that we've been on top of is this large spike in oil markets, which in turn led to a big sell-off in the bond market and inflation fears, which in turn led to a sharp sell-off in stock markets. We are now seeing reversal patterns across the board. Bullish piercing line in the ES, bullish piercing line in the Dow, bullish piercing line in the Nasdaq. Rock solid support technically. Beautifully hammer reversal in Euro stocks. That is suitable for buying long at market. That's absolutely great. Technically, that's pretty much as good as a long position can look like. Nice hammer reversal. See the tail, twice the size of the body. Notice it's sticking out. Can see it's rejecting this huge support level, right? So a one-to-one risk reward is totally reasonable there, right? Going up. Let's just get rid of that. Going up to the 6,120, just a little bit higher. Now, the problem is it's huge, and the risk reward isn't great on that kind of hammer reversal. So what you can do is look for a potential 50% retracement, which we may get on headlines moving lower. So a 3-to-1 risk reward is a much sort of better option on this. So if you can get a 3-to-1, which would be a retest of that 566, that's not an unreasonable trade outlook there. And the reason for it is just the stabilization in the market after the sharp volatility that's been triggered by Middle East tensions earlier in this week. Um, Equity futures are modestly higher today as oil prices are continuing to retreat, right? They're pushing off their highs. And in turn, we're seeing gentle bids coming back into the bond market. So it's just saying, okay, a little bit more relaxed out there. Now that means in FX, the dollar is pushing off its highs. So although the dollar's holding within a relatively contained range, the market now has a perspective after US President Donald Trump, the conflict's going to end soon. And when we were looking at the futures markets yesterday, around yesterday afternoon, we were seeing a few headlines coming in, Israeli leading officials saying, we're coming to the end of our campaign. There was just there was a mood out there that, this is on the shorter side of a conflict rather than the longer side. And that's what the markets are reacting to. If the oil markets drop down, that's fine. We're back to where were square one. And what I'm reminded of is the taco trade, right? Trump always chickens out. And it's a rather sort of crude way of saying that US President Trump, he has an eye on the bond market, he has an eye on equity market, and he's not going to cripple the US economy. The time when he sort of obviously chickened out was when it was maybe 8, 9 months ago when the tariffs on China, he said they were going to go 146%. It was just going crazy. And for the first time in my professional career, I saw a wobble in the US Treasury market that was based on confidence in the US as a whole. We saw that happen in the UK when Liz Truss was trying to fight inflation by stimulating growth in a kind of Erdogan kind of technique, bizarre. And we saw a big wobble in the gilt market as investors just lost confidence in the UK. Now, I'd never seen it happen in the US, and the US is obviously the world's leading economy, and that had ripple effects around the whole world. So the broad perspective is I'm expecting Trump to back down. If oil prices go up again, Trump will alleviate it. And we've got a number of nations talking about escorting oil tankers through the Straits of Hormuz. There's also talk about strategic reserves being released. I think it's about 400 million barrels is being mooted. Now, to put that in context, ING pointed out helpfully that that's only about 20 days of Middle East production. So even a 400 million barrels release from emergency reserves is only like a sticking plaster on the problem. It will help in the near term, but it doesn't solve the problem, and it eats through 1/3 of the strategic reserves for the US, and that's quite a chunky price to pay on this conflict. So what it means, the dollar's moving lower on the suggestions that the Iran conflict could end sooner than expected, right? So that's kind of the major narrative that markets are moving in. And you can see, again, bullish piercing line pattern here on the NASDAQ. Okay, just bullish piercing line is when you have an open underneath the previous day's candle. So in other words, sellers think, hooray. And you remember yesterday, oh my goodness, we're breaking out these new lows, disaster, disaster. But during the course of the session, price moves higher. We got this on the futures market yesterday, got a nice turnaround in the ES. And the fact that the close is above the 50% of the previous day's candle makes this a bullish piercing line. So look at this pattern, right? And have this memorized. It's great for stocks, and it's a very, very reliable technical pattern. So what you're looking for is this close of this candle to one, open underneath the close of the previous day candle, so tick, and then section two, part two of the pattern is you need the close to be above the 50% of that first candle, tick. And you see how we just touched that 50% and moved higher. So this is saying support. So technical support in NASDAQ, same in the Dow, same in the ES, same in the DAX, same in the Euro. So it's just a buy bias across the board. But, right, do I want to have massive open risk on this? No. Why? Because we're one headline away from markets moving sharply lower. So that's why I don't mind, a 50% retracement, a 3-to-1 risk, because the risk reward makes sense. But this is not technically as reliable because of the macro fundamental story, which is still out there. That's the issue. And if you remember yesterday, I was saying the key thing with trading yesterday is just to make sure that you don't have risk that's just sort of huge stops. And we saw here, like in oil, you see around the session yesterday, oil was up about $100 a barrel. And look, it's fallen, $80 a barrel. So we had this enormous drop yesterday just on the normal volatility. You see, that's a 21% fall. So the moment you start adding leverage to that, you're in trouble. And that's why we're looking at very, very little tight entry. So we were looking at that tight entry yesterday, and we got that just before Trump's announcement. And you can see that was a potential for a move. And then you're moving straight to break even as soon as that happened, right? I had a long in the dollar yen based on yesterday's outlook. Let me just show you. And I moved to break even on that trade. You can see here we've got a run up from the 158.08. We were looking at this region here, and I got to move up sort of 30, 40 points, and I was at break even when I got hit there. Right, now the euro dollar trades we were looking at yesterday. I was looking at a short from the 1600, didn't get it, and then once I got to the end of the day, just closed out. Right, I didn't leave these positions hanging on, and you can see Trump's message resulted in that dollar weakness. That the conflict's gonna be ending soon, oil prices moving lower, and so we're seeing the dollar push up. And if you look at the euro dollar technically, bullish engulfing bar from this big support level. Okay, so we're in quite a different environment, and we're looking at potential dollar weakness coming back in. And if you take all this off, what you've got is you've got a false break of a Harami inside bar, false break of coiling inside bars, and then a bullish engulfing bar from big support. So technically, this is trying to bottom. So markets around the world are trying to bottom on this narrative. So what does that mean for us today? So let's go through our normal process, but I just wanted us to have that big picture look before we sort of get stuck into some of the detail. And the first thing to be looking at is what's going on with the news and audio squawk. So going through to 6:30, we'll just check the extra narratives that we have. Okay, we've got the Trump said the war will be over soon, thinks the war is very complete. Right, Iran has pretty much no navy, no air force. The US is very far ahead of its initial 4 to 5 week estimated time frame. So that brings the end of the conflict sooner. Obviously, we don't know what US President Trump is going to do, but that's the sentiment that's going out there. Iran's Revolutionary Guard said they won't allow a single litre of oil to be exported from the region if the US and Israeli attacks continue. Why added they will determine how and when the war ends. It stated US President Trump's comments about Iran were nonsense. So what this really means, from a geopolitical perspective, Iran needs to hold on and keep the regime, right? It doesn't matter if haven't got any navy. It doesn't matter if they haven't got um, any soldiers or anything military left at all. If they just keep the regime, that's their aim and that's their goal and that's their win geopolitically. The US perspective is trying to change the regime, and that's the battle that's going on. So Iran's holding out as much as they can, and they want to see oil prices spike as high as they can to put as much economic pressure on US President Trump, and that's what's going on here. So they will obviously try and fight back and try to make it as difficult as possible for US President Trump. And US President Trump is obviously going to try and keep that Straits of Hormuz open and get the oil flowing. And that's what's going to be the battle. And it's which side can hold out longest, essentially. Um, and we've got flurries and flurries of headlines. But the market is telling you on a probabilistic sense, the market is seeing an end to this conflict, right? So that's what's giving us that perspective. Um, Dixie is lower, yields pulling back alongside the reversal on oil, dollar's haven appeal further dwindled, right? So that means we've got some decent potential opportunities here that are worth looking at. So first of all, dollar consolidation mean reversion. The dollar's got this sharp geopolitical unwind move. So the first principle is that markets often consolidate after this type of repricing. So we're looking for dollar consolidation range, fading extremes in the dollar, and range trading in major FX pairs. And that applies to the euro dollar, dollar yen, pound dollar. So first of all, a range trade for the euro dollar is worth looking at. So what we're looking at here is where is a decent range, right? So first of all, that is a very sharp intraday trend line. If we just drop down here, you'll see that here. The range for the day, the bottom of that range is that 1.1607, and it's the top of that gap. So you see that gap from Friday, right? That has essentially become the next support level. So that means range trading, euro dollar longs makes sense from any retracement down to that 1.1607 region. Right, again, 5 point stop possible, try up to 3 times. That's suitable. Another pair that's worth looking at is the pound dollar. Um, the pound dollar is trying to break above its 100 daily moving and its 200 exponential moving average. That's technically important. Breakouts above moving averages often attract systematic flows. So if the price holds above that 200 and 100 exponential moving average, right, watch for pullbacks into previous resistance to act as support. So as long as this sort of environment remains, this environment of recovery, geopolitical tension and anxiety fading, so look at oil markets, then we remain a possibility to buy the pound dollar on breakouts. So what we're looking for here, you've got this potential break of this inside bar pattern here, right? So that means any retracements back down to this area as it currently stands is suitable for buying. So that means we can look at this area here, 1.3426, and I would just get just a slightly larger stop, like a 10-point stop around that region there. Now, if we just look at implied volatility levels, see what big levels we got here. See if there's an obvious turning point that's standing out. And the thing that also pushes me to the pound is the interest rate differentials you're seeing here now between what's going on in the UK and the US. Um, the Bank of England and the UK is much more sensitive to inflation spikes at the moment. And you see how markets are priced in, they priced out, as it currently stands, all interest rate cuts this year, right? On that oil spike. So that's just keeping the pound elevated. Um, and that gives us this pound dollar buy bias for today, 1.3355. 1.3355, 1.3355. Right, so that with a 3355 will be right down here. Yeah, okay, so it's too far down really to hold. But what we're looking for is just this potential breakout there. So that's quite an aggressive area to enter, but it's not unreasonable. But however, should we get down to that 1.3355, that is not a bad area. I would actually say that that is legitimate on today's price, right? If we did go all the way down there, it wouldn't be unusual to see dip buyers on that dollar recovery story. So they're the two sort of areas I look at. Then the other area to look at is based on economic data we had overnight from Australia. Um, the Australian trade data was showing much higher than expected trade conditions, big boost in exports, and those Chinese growth expectations have also helped copper and base metals. So if you have a look at copper, nice hammer reversal, see iron ore futures pushing up, that big spike lower in commodity index like pre-market we're trying to move up. So this commodity support, Chinese growth, right, is helping the Aussie US dollar upside narrative. So again, let's look at somewhere that's decent in terms of, yeah, in fact, it was 21.8% year on year higher than expected. China's export growth for the first 2 months of 2026. And the strong global demand is offsetting the drag from the US. So it's all good news for China. Standard deviations 70, 15, and 69.60. 70, 15 for the options level. Just going to have a look. Right, 70, 15. So again, what you can see is this consolidation of instant bullish engulfing bar attempt at breaking out above this level. So with that breakout going on and this potential trend line right? It is a potential trend line because it's only got like it's only really got two touches. You could argue three. It's still only a potential trend line, but what that means here is that this makes nice potential for Aussie US dollar upside from 70.82. Yeah, now pound yen longs, I think that's okay as well. The only slight difficulty with the yen is that the yen can potentially strengthen on oil prices going lower. Let's have a look at the yen, what it's doing today. Well, the yen still remains reasonably weak. So I think a pound yen bias is absolutely fine. Um, just going to have a little look technically, see if what's out there on it. Um, dollar yen shorts are also legitimate. Um, we'll just quickly look at that. Um, there's probably liquidity on both sides here. So dollar yen, very suitable for shorting if we get back up to that level here. So again, the bottom of that rising window. Again, that's not a bad area for shorts. But either way, remember, tiny risks on a day like this, the volatility is awful out there and can just spike at any moment. I say awful, it's great when you're in the trade, but it's awful if it's going against you. So got to make sure that everything's very tightly managed. Okay, let's have a look at pound yen. Right, clearly strong bullish conditions, holding above the 100, 250 exponential moving average. Have a look on the weekly. Got that sharp sell-off based on the US government asking for a spot check on dollar yen. So the problem with this is obviously intervention risk the higher we get. So start getting up to 214, 2150, that's going to be indicative of intervention risk. But in the meantime, longs are absolutely fine. Um, just trying to see where's a decent area. Nice short, sharp trend, breaking above these swing highs. Swing high, swing support, support. So resistance, support, support. It's around here. But 8 point stop around there would be nice. I think that's suitable for longs. The other option would be like bouncing off this trend line. More aggressive, looking for that. More conservative down here at the 21168. I don't see a problem with it. The only slight issue is if obviously the risk format changes, then this can this can move higher quite sharply. So pound yen has been quite good um, constantly, hasn't it, over the last days of stress. So pound yen seems quite nice. Then today, in terms of the macro that we've got coming up, you're very welcome there, Jam. Um, just check I got the right date. 10th, 10th, 10th. Right, very light in terms of US data. It's all going to be geopolitical headline risk and sentiment. So it's going to be watching out for updates on Iran and the Strait of Hormuz shipping and oil price reaction. So what we're looking for here in terms of headline is if the Straits of Hormuz open, then we're looking at like sentiment stocks, ES, NASDAQ, DAX, Euro stocks higher. We're looking at euro dollar higher, Aussie US dollar higher, pound dollar higher. If we see Iran blocking the straits again, there's more problems with the Straits of Hormuz. Then we're going to see oil prices move higher, the dollar strengthen, euro dollar down. We're going to see dollar strength across the board and equity markets pressured lower. So that's the thing. The way I'm reading it now is that markets are sort of starting to look through this, and they're confident that the conflict is coming to an end. That's what I'm seeing in the volatility. But do I do I want to buy this here? No, because the macro conditions are not suitable. Because you could take a long here on a technical picture that's perfect, but then the macro fundamental outlook could destroy it instantly. So that's why I favor looking at these short opportunities with small amounts of risk. So euro dollar fading the extremes to the 1607. Again, you can look on breakouts and short term trading patterns. Like you can see here, this kind of flag structure, right? That's what you want to be looking for. See, pushing higher, flag structure, breaking out on balance, volume moving higher, go with it. So again, you're looking for the similar kind of continuation if we get that. Right? Do we get that? Up. Do we get consolidation, breakout on balance, volume higher? Then you can go with that intraday, right? That's absolutely fine. But just make sure the risk is really kept tight on a day like this. Don't have like 200, 300 points of risk because it could just go on a headline and it's just a waste of capital. Um, Aussie US dollar again, and he drops down to that 70.81. So that's suitable. That better than expected Chinese trade data. So looking on the Aussie US dollar, similar kind of setup, and you can see it's trying to break out here of this pattern. See, it's breaking out, but on balance volume is sort of choppy, and it's trying to push above that level. Failure, get under there, then it's suitable for buying at the 70.82. Yeah, yeah, Brian, it's a good question, and I'm finding gold tricky at the moment, which is why I've kind of avoided it. Um, the near-term direction is that we've got this weakness in the dollar supporting gold upside. Technically, this is screaming upside. If you look at this, you've got consolidation, inside bar, false break of an inside bar. So if I was being like super aggressive on gold, what I would do, right, is you've now got that false break of that area there. So what I would do here is I would look, okay, is there a long position I could take here with a minimal risk going for a breakout of this consolidation, which is really a breakout of the mother bar right here. So what I'm looking for is this. There's the mother bar up at the top, which is the candle from Thursday, March the 5th. So if you look at that, what we'd want, right? Yeah, and you see here, yeah, it's actually there, isn't it? Right. Do you see how it's gone right up to that high here and rejected? So, yeah. So what I'd say, Brian, is the trade is being clever here. Right, $7 stop, try up to three times, and it's a breakout of that high, right, of the 519596. Um, Obviously, gold is getting pushed and pulled. Is it geopolitical safe haven concern? Is it dollar strength? And so it chop, 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 chop. If the dollar keeps weakening, then I can see gold having a little bit of upside just on relief that the dollar's weakening. Right? And you can see that consolidation, false break of army inside bar. So technically, what I'm looking at is this area here. Yeah. So that will be that will be it for me. Okay. If we get up above there, stay with it. If you get a breakout, look for a retracement. So just underneath the 5 to 5,200, break out that. And then I would move my stops to break even quickly after about $25 move to the upside, and then leave the rest of the half run to see if you can start going up to the 5,300, 5,400. That's how I deal with gold. But I'm finding the macro conditions tricky on gold, so I've stayed away from it. But technically, that's a lovely little area and an obvious kind of inflection point. Yeah, it is, isn't it? Yeah, I just haven't quite got my head around it in the current narrative. Um, but the nice thing is that at least the technicals is really, really clear. Um, and that technically says upside. And if you really wanted to be clever with the technicals, like would be like a retracement back down to those lows and then have like a $10 stop and try up to three times just down to that level down here. That would be fine as well. So they're the two levels I'd look at. 50.90, try up to three times. 5,195, try up to three times. Hope that gives you some ideas, Brian. You're very, very welcome, Brian. All right, folks. That is all for now. So again, volatile days. Look out for headline in the Straits of Hormuz. Look out for US President Trump and the length of the conflict. Look out for anything that's talking about dialing back, end of the conflict, coming to an end. All of that should continue to allow sentiment to keep pushing up. If you want to keep an eye on the sentiment, just pull up the VIX and you'll see how markets participants are feeling depending on how high the VIX is going, how low it's going. That'll give you a sense of the sentiment. Okay, folks, look forward to seeing you tomorrow. Take care and speak soon. Bye for now. Yeah, cheers, Ruby. Yeah, thanks, Tim, and you. Cheers, Najam. See you guys.